Hello traders out there in Traderland. My name's Dez here at Grok Trade. And today is Wednesday, January 21st, 2015. And the markets in the day mixed. Check this out. We have the S&P up 0.5%. The Dow, though, only up 0.22%. NASDAQ doing about the same, but the Russell small caps, the more risky stocks out there, were down 0.34%. That's showing relative weakness here across the board because you have Russells dragging the rest of the markets down. Banks concur. Financials dipped almost 0.5% in today's bullish run. Ouch. There's no underlying strength here to the market, at least on how the market ended here on Wednesday. The VIX dropped 5%, saying that, hey, today's bullish move is justified. So we have some mixed market internal signals here at best. Gold break even, silver up more than 1%. And then you have here crude oil bouncing up 1.7%. US dollar pulling back a little, and that little pullback we have in the US dollar helped the stocks go higher. And utility index, which is the defensive sector, up nearly 1%. So people starting to retreat to utilities. And here we are looking at the S&P 500 daily chart. And yesterday I told everybody to be watching this 230 mark, 230, because that was basically the apex of these two converging trend lines coming together. But what we saw is we came up and smacking our head at the resistance point here of swing high, and we're right there at it, a smidge above it. So we have a good chance of this starting to break out and above. If you look here, we're still below the zero line on the MACD. It needs to get over there. Now we're trending in the right direction, heading higher. We do have a bullish. You'll see here the lower swing low. Well, we have a higher swing low here. So that higher swing low is a bullish divergence, and there is a decent chance of follow through happening. Because of that, I maintain all my long positions. And I did shave off in part some of my hedge just because of this bullish activity through the apex where these two trend lines crossed each other, and that we're above the 2030 mark that we were talking about. Because of that, I went ahead and shaved off part of my hedge position. Now, what I do know is anytime you are mixed up in all the moving averages, you see the blue and red lines, the 20 and the 50-day moving average. Then you have the EMAs here, and then you have the 100-day, and you can see all those right here to the left, and those will tell you exactly what I'm using and how I'm using them. And that is where we're at. Now, anytime you're in the middle of these moving averages, you get a lot of choppiness, a lot of craziness that will take place, and it's something, you know, to be watching out for. So, anytime you're just, I look at them as sticky spider webs. Once you get into them, they're hard to get out, and they just chop around violently. So it's hard to make any rhyme or reason out of that. Now, if you take a look here at the NASDAQ, you'll see that we came up, smacked our head right where these two lines come together. It's threatening to break out to the upside. We're still on the below the zero line on the MACD. Russell's is saying that we smashed our head on that a couple of days ago, and now we're dropping. So if the Russells is leading the charge, it means the rest of the markets will drop also. We'll stay just in line with that. But it's anybody's guess if that's what will happen. Quick look here at gold. Gold's higher, almost a hangman reversal pattern. So it might be time to take some positions off the table there and take some profits. And wait for a pullback. Silver, same thing. Maybe wait for a bull pullback and reload all those long positions there. And I'm holding BABA. BABA is up nicely over 3% just today alone. Boom, smashed its head on a trend line. So once it gets up there, I may be looking to get out of that. It went up on some okay volume, I guess. Let's see, anything else? Any big movers? Google is up more than 2%. Nice little pop there. And LinkedIn was up almost 3% today. It needs to run because it's been buried for the last few sessions. So we got a brand new website getting ready to come out. I cannot wait to release this to you guys. Big news on that soon. Very exciting times. So if you want to get mentored by us, we're your people. We've mentored a lot of individuals. And feel free to go to Grok Trade and type in review, Google Grok Trade reviews, and that'll tell you what you can expect with our mentoring position or our mentoring services that we provide. Take care. We'll catch you guys tomorrow.
My name's Todd Muffley. I'm the owner of Fat Adam Internet Marketing. I've been in Carmel for 5 years and in trading for about 4. Before mentoring, my trading was erratic and losing. After mentoring, after going through the mentoring process, the biggest thing that I found was a system. And a system that basically said if you follow these rules and you do it religiously, then you will be successful. Mentoring benefits to me were having somebody that you could call on and talk to after the mentoring. I think is important because, you know, it's like going to college. When you go to college, it's great when you have the teacher in front of you, but afterwards, who do you call on when you need advice? So that was a big thing. The other part that I liked about mentoring in the process was that does go slow and methodical through the process, and so I never felt like I was being rushed into something that I didn't have complete comprehensive knowledge over before we went on to the next item. Of course, I'd recommend them, and the biggest reason why is because just like you have a trading education that everybody wants to garner, I think it's important to have that in a formal platform. Instead of just going out and doing your own research and maybe reading a book here or there or following a strategy, it's, in my opinion, a good thing to have a comprehensive program which is tried and tested and true, rather than just, hey, you should follow this stock pattern and only trade it. If I was on the fence about it, I would just evaluate my past 50 trades and see how I did. And if I'm a rock star and I'm kicking butt, then maybe I would evaluate it a little bit more. But if my last 50 trades have been shaky or the wild, wild west, I guess you could say, then I would definitely say it's something that you should look at. The other thing is just don't believe, these testimonials. Actually reach out to the mentors at Grok Trade and figure it out with them to talk to people individually. So you can get a one-on-one representation from somebody who's been through it as well. So it's not just, a quote-unquote salesperson telling you how good it is, but actually learn from the people who've been there.